Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now cash-loving investors dig in even as US rate cuts threaten payouts. Now, this is a bit of an embellishment of what the data was on Friday. It's a good starting point to really kick off the week. Now, the PCE price index numbers, okay, if you have a look, they're basically on par with what the market was expecting, right? So there's no sort of major surprises here. When you look at the charts and the price action last week, it sort of goes back towards what happens when there's not much happening as far as economic numbers, right? That fourth week of the month, we started to see some US numbers which weren't strong, but which weren't actually weak either. So there was a bit of an unwinding of weak or short US dollar positions, right? And with that, so the dollar starts to rally, euro, sterling, Aussie, Kiwi starts to sort of roll over a bit. And it's the path of least resistance. If the market's like, you can see exactly what's going on, right, with the US dollar. And if I show you a graphic here, a good graphic on inflation, right? Let me just blow this one up. It's the path of least resistance, right? And when you look at all the different inflation measures here in the States, okay, here's a good graphic up till July. You got the Fed funds well above all the inflation indexes. Now, the PC index target's like 2%, but it's time for the Fed to start cutting. So, like it's obvious, we get short dollars. But when the whole market is short dollars, you do see the odd sort of flush out of positions. And where does it stop? Well, it usually stops at resistance, which it has done on this occasion. But you know what? I know for a lot of traders it's been disappointing because we've been sort of calling the US dollar downtrend, which is still going to be in play. And if you look at the charts on a longer term perspective, nothing's changed, right? But what you can do is you can get caught up in the sort of the hourly sort of time frame of what's going on short term, and you know what, we see a bit of a flush out. So that's what last week was. It was like a slow, drawn out burn, and that's where you start to get a like a short dollar squeeze, and then the market. So short dollar means everyone slowly starts buying their positions back, and it squeezes the dollar. So the dollar actually goes up just because everyone's closing out positions, right? And that's what we've seen across the board here on all these instruments. But to me, like there's no change. Like the Fed are going to be cutting. Now, what has been sort of backed out a little bit, and if I just show you the interest rate probabilities, there hasn't been a big change in the derivatives market, but the market's gone from sort of really focusing on a 0.5 percentage point cut by the Fed, and that's not till the 18th of September, right? We get another couple of weeks to wait before we get to the Fed, right? So what that's going to see is the US numbers, especially coming into the start of the week, are really going to be directional, right? Non-farm payrolls, not a great trading opportunity, but a good indication of what's going on in the market. And then you got the CPI numbers the following, I think, Wednesday. They're the sort of two key ones. We've got retail sales and a few other things. So the dollar's going to bounce around with these numbers. And it's more around, are they going to cut by 0.25, which I'd say is what's going to happen. If we had some shock to the system, like the non-farms and the inflation numbers really collapsed, well, then that's when the 0.5 percentage point move will come into play. So it's not about whether the Fed are going to cut, it's by how much. And if we get slightly stronger numbers or as expected, then it takes off the potential for a 50 basis points. And that sees the dollar rally, even though they're cutting rates. Okay, so it's a little bit of a tricky one to get your head around. Like just looking at the global markets at the moment, we had the NASDAQ had a really good day on Friday, up 250 points. You're going to see a little bit of that given back today. Like the US Treasury yields really haven't gone anywhere, to be honest. If any, maybe a fraction lower on the short dated treasuries. And the major currencies, well, they were just drifting all week, right? And that's because we didn't have really substantial top tier 1, tier 2 data coming out of that. But as I said, don't get disillusioned. Like that fourth week of the month, it's not a great trading week. Occasionally you get some good opportunities, but I think even this clean out here in euro and sterling, right, still sets us up for good like retracement moves. This is like a retracement week. Now we see the trend come back into play. and you're looking for the dollar to continue down, right? That's what I'm looking for. But it's going to come down to the economic numbers. And if I just come back and get up our calendar here, I'll just go to trading economics. It's a bit easier to sort of see a bit of a plan here. Now I've got the top two or top tier and second tier numbers. So like this week is pretty active, right? And you should expect some opportunities as we go through this week, right? With a lot of the numbers, a lot of Swiss numbers coming out at the start of the week, right? It's not often the Swiss takes the lead in a lot of the movements, but just keep a very close eye on that. You got the Chinese manufacturing data. So there's a few bits and pieces to really reconnect the market Monday. But then you come into Tuesday and we have the ISM manufacturing numbers. Well, these are good US numbers to get early in the week to give us some sort of angle on the US dollar, right? You got the, as I mentioned, the Swiss numbers there. So keep an eye on those US numbers. Tuesday, you come into Wednesday's trading, and we've got sort of activity across the board. Okay, GDP, some services data out of China, balance of trade numbers there. You don't really get much out of that. But the Bank of Canada, I mean, the JOLTS job openings, that's like a third or fourth tier number. But the Bank of Canada are expected to cut rates. I think it's about close to 80%, really. So when they cut rates, and I'm pretty sure they will, just be aware that that's factored in. Okay, the CAD or Canadian dollar may go down a little bit, right? If I just come back to that interest rate probabilities, Bank of Canada, okay, cut. Yeah, very close to 80%, right? So, and they're like, I mean, how's this? The derivatives market is factoring in a 0.5% cut, 20% chance. And we're getting to stages where the central banks are under the pump. I can't see them going by half a percentage point just at the moment, but you have to sort of consider that's what's sort of out there. So when you come down to, because this is expected, the cut, it really comes down to the press conference. And the fact is, with the market sort of factoring in a half percentage point cut, they're probably going to be talking about, you know what, we've got to keep things rolling, keep it consistent, like give the market a path. Like half percentage point cuts is a bit panicky. And I don't think they'll be looking to express that. But the press conference will be a little bit lively. Then you come into Thursday, right? And we're starting to get some the S&P construction numbers. Once again, the Swiss, it's a big week for the Swiss unemployment numbers. Yeah, balance of trade in Australia, not massive. Then you get the initial jobless claims, and it's a little bit of a preview, right? The ADP employment change. You got some crude numbers there. ISM services data, okay, the non-manufacturing numbers. That's another good number for the dollar. And then you come down to Friday, and it's a hard one, right? Because we've got the non-farm payrolls. We've got the Canadian employment numbers. This will be a good one for the Canadian dollar traders because, you know what, we have the Bank of Canada. They tell us what the plan is. And the first number a couple of days later is the unemployment figures, right? And this will tell us a lot about what's happening in Canada and what the next move on rates will be. But so a bit of a clash every second month. You get the Canadian and US employment numbers out at the same time. It is a bit of a calamity. Now, I'll be watching the US non-farms for, you know what, the overriding sentiment on the US dollar with regards employment, unemployment rate, employment change. You know what, as I said, if we see some changes here, the unemployment rate, so maybe blowing out, and the non-farm payrolls change lower, well, I tell you, and the numbers are just definitely dropping, then we might see a rush to that 0.5% cut for the Fed on the 18th of September, but we'll have to sort of wait and see how it plays out. And that's pretty much how it is. So when you are trading this week, you know, we'll be posting some trade setups that we think there's good cash in. Monday is a reconnection day. Tuesday, definitely see what the US dollar is doing here. Keep an eye on the Swiss, right? It's just a dark horse. Like it can throw up some anomalies occasionally, but let's just see how that plays out. You get into Wednesday, the Canadian Bank of Canada will be the really major focus, CAD and CAD crosses. And then you come into Wednesday. Well, by the time you get into Thursday, the market's already looking ahead at the non-farm payrolls, right? So there are some things coming out here on Thursday. but it's really setting us up for the non-farm payrolls. And this is the last stop saloon, right? If you're trading the non-farm payrolls aggressively, it generally means you've had a bad week and you're trying to make back cash. We have to wait and see how the market is set up before that number. It could be an opportunity we could take advantage of, or it could be just a calamity, right? So we'll assess that as we get closer to that date. The Canadian employment numbers a little bit easier to digest and trade, but trying to trade dollar CAD, okay, with these two big numbers coming out is a little bit of a troublesome one. But we'll see what happens as we get closer to that date. All right, so that's where we are as far as the opportunities this week. It's the start of a new month. We've got central banks across the board. The only sort of painful thing is, if you look at the dates here, right? ECB the 12th, Fed on the 18th, Bank of England on the 19th. You can see where it's going to get busy. Obviously, the Bank of Canada on the 4th, which is this week, RBA 24th, and RBNZ 9th of October. We've got a bit of time to wait. And that's a little bit of a nuisance. But what it does is, as we get closer to these dates now, the economic numbers will impact more, right? And there's opportunities around those. We just have to keep a very close eye on our technical setups and see how they fit in with the economic numbers and the overall trend, right? So there's a few things, a few components to work together. The good thing is, and don't think this is bad, like this squeeze in the short dollar, that's the dollar index, right? And you see a short squeeze on dollar Swiss and dollar yen, dollar CAD's doing its own thing. And then you've got the squeeze lower in euro, sterling, bit of a short squeeze here in Aussie and Kiwi. The fact is the dollar's doing the same thing across the board. So it makes trading, definitely the majors, a little bit easier, right? And with those changes that we see in the economic numbers, it will impact what the Fed is going to do with regards interest rates, right? This is, the Fed funds target, 67% chance of a 0.25, 33% chance of a 0.5. No major change there, regardless of what the news services are telling us, right? There's no major change from what the underlying derivatives market is thinking about what the Fed are going to do on the 17th, 18th of September, right? So all we have to do is just be patient, wait for the markets to line up, see how the equities are moving in relation to the bond markets, the interest rates, underlying interest rates, and then see what the majors are up to, because these are all working together. It's not a bad sign coming into the start of a fresh month. I like this setup of the trading instruments technically, because they're all doing the same thing. So when we see US numbers, those ISM manufacturing numbers on Tuesday, that's the first sign of where we might see dollar weakness or dollar strength, and we can start to sort of plan and map out trades around that, right? This is one of those ones where you're using all components of your knowledge about the market to try and isolate the best trading opportunities. There's no need to rush in. We take our time and piece it together from there. All right, so don't forget, keep an eye on those interest rate probabilities on the website and the calendar, where you can get all the full ranges of the data there on the economic calendar there as well. We're going to make a few tune-ups there to the calendar, make it a little bit easier to read, but connect the dots with what the central banks are doing with the economic numbers, and that's where the trades will come from. All right. Have a good week. This is the start of a new month, and the second week is even better, right? With US CPI numbers and a whole range of other inflation numbers. All right, guys, buckle up. Get your charts done. Get your analysis in there. If you have any questions, jump online. You can always get your answers on the trade zone there. All right, guys, have a good one. All the best. Cheerio.